Bitcoin ideas are so different than traditional investing concepts that it can be difficult to go down the Bitcoin rabbit hole and retain any of your old convictions about how money should work or what investments should do. And that's something that happened to our guest today, who came from a background of traditional banking and investment brokering, went down the Bitcoin rabbit hole and never looked back. Jesse Berger is a Canadian Bitcoiner and the author of an incredible Bitcoin book, Magic Internet Money. He's joined us today to talk about his own evolution of his personal understanding of Bitcoin investing and what it means for the future of money. I'm Scott Dedels. I'm the CEO and founder of Block Rewards, and part of our mission in bringing Bitcoin to the workplace is helping people understand how it will help them. If you're interested to learn something about an incredible Bitcoin book and one person's journey on how understanding Bitcoin changed their view of money entirely, stick around. We're about to get into it. All right, welcome to another episode of the Block Reward podcast. We are joined this week by fellow Canadian Bitcoiner, author of Magic Internet Money, Jesse Berger. Jesse, welcome to the show.
Scott, thank you so much for having me, my friend.
We're going to do our best to have this not be the video that gets my YouTube channel censored by the Canadian government, since we're not only fellow Bitcoiners, we're fellow Canadians living up here in interesting times.
I may have a few thoughts on all the stuff going on, but we don't have to dive too deep into that.
Yeah, it's funny, as you get ready for these things, I'm sort of scrolling your thread, and, you haven't necessarily really checked out someone's Twitter file, and I'm like, oh boy, we could go a lot of different directions with this, looking at your pin post, which if you're listening and you want to check it out, I'll just let you do that for yourself.
It's just questions. All I'm doing is asking questions with that pin tweet. I don't make any claims of any kind. It's just open-ended questions. That's all.
Yeah, absolutely. And they're great questions. Questions worth considering. We'll say that. So yeah, we were chatting offline before we hit record, and you and I do share a lot of different things in terms of our backgrounds. Beyond being Canadian, we have a history in traditional financial services. And you kind of went down the Bitcoin rabbit hole, it sounds like, on a similar time horizon as I did. Maybe can you just tell us a little bit about yourself and your Bitcoin journey, what led to writing the book?
Yeah, so my orange pill story was a bit of a multi-pronged story. I had a few touch points with Bitcoin before I really got it. But I'll give you my background, which helps lead into why I sort of got orange pilled and started to understand Bitcoin. I started my career in retail banking, working at RBC, which is one of Canada's big five banks. I was issuing credit cards, credit lines, mortgages, opening bank accounts, doing mutual fund and retirement investing. So sort of bread and butter financial planning. Did that for a few years. And from there, I ended up jumping to full service brokerage, where I worked with a portfolio manager as an associate, helping to manage high net worth investors' portfolios. So doing stock picking and analysis. Not so much trading. We tried to be more long-term focused, but I also happened to work with a broker who was a little bit more aggressive than most, because we were in the gold space. And the reason we spent a lot of time looking at gold mining companies and buying gold was because the portfolio manager and myself had both come to understand that the financial system was irreparably broken. For me personally, it started actually near the beginning of my retail banking career when the financial crisis hit. I vividly remember the banks getting bailed out to the tune of $600 billion. And I sort of was sitting there scratching my head, asking myself, did they just have $600 billion lying around? And they just decided, of all the industries, we're just going to give it to the banks. All the other industries that fell by the wayside, they don't get any help. But we're going to give the $600 billion that magically appeared from nowhere, that was, I guess, sitting in their savings account or something and being unused. They're going to give it away. That didn't make sense to me. And I understood, obviously, that they had just printed it from nothing, or I learned, I should say, that they had printed it from nothing. And so I asked myself, well, what is money if it just appears magically from nowhere and is just selectively given away? This is completely and totally unfair. Why am I working so hard for this money that someone else just hits, control print or control copy, control paste, and boom, there's more money. So I started asking questions about the monetary system. I learned about fractional reserve banking and how we live in a debt-based monetary system and all money is created out of debt. I started learning about gold and why gold was previously the basis of our monetary and financial system. So that's why I initially became a gold bug starting in 2007, 2008. I had heard about Bitcoin I forget if it's 2010 or 2011. And right away, I understood three key principles of Bitcoin. Number one, only 21 million coins. There's never going to be more than 21 million coins. So fixed limit, whereas with fiat, we just printed 600 billion more and they're going to print more again and again later. Number two, predetermined monetary policy. So although there's 21 million coins, they don't all exist from day one. They are issued on a predetermined schedule that started in 2009 and is set to end sometime in the year 2140 or around the year 2140. And the coins are being issued at a decelerating rate. So the rate of issuance, aka the inflation of Bitcoin supply, is decelerating and getting slower and slower. So the money is hardening. The monetary issuance it started with a very sort of aggressive monetary policy and now it's curtailing and getting harder and harder. Whereas with fiat, we're going the other way. We started with a relatively flat curve. And then the issuance of new money or new tokens is in the form of US dollars, Canadian dollars, is going on the hockey stick, curve. So 21 million coins, predetermined monetary schedule. And number three, very important, all coins, there are no free coins. There is a cost associated with creating and bringing new money into circulation. So the same way gold isn't free, you have to go into the wilderness and dig deep and explore further. And it takes time and energy and skill to bring gold out from the earth and mine it. Bitcoin has that sort of similarity where there is a costly input to bringing it into circulation, whereas fiat, that doesn't exist. With dollars, that doesn't exist. So I understood those three principles early on. I had no idea how sort of the technology works and public key cryptography and any of that stuff. I wanted to buy some when I was working as this associate portfolio manager. In 2011, I was talking with a few of my colleagues and I remember saying, oh, wouldn't it be great? We should just buy, we'll put $1,000 in at $1 a coin. Let's just buy it and, we'll see what happens. And we sort of put our heads together and then we realized, oh, we're just a bunch of idiot bankers. We wouldn't know what to do with these, even if we got them. Didn't buy any. Bitcoin goes from $1 to $50. And in my head, I go, oh, I missed the boat. It's over. Anyway, so fast forward a few years, I ended up doing my MBA. I ended up working in management consulting, spent a couple years running the market research program for one of Canada's large insurance companies. So if you ever get those surveys, rate our service out of 10, how likely are you to recommend, tell us about this or that product. I basically ran that survey for one of Canada's big insurance companies for their global marketplace for Canada, the US, and a number of other countries. Just collecting the feedback, collecting the data, doing some analysis on it, and then saying, okay, here's what people like, here's what people don't, here's where you can improve, here's where they think you can improve, all that kind of stuff. And it was during that time, so that was about 2017, where I had my next touch point with Bitcoin, where basically I bumped into an old friend. He said, hey, you should check this out. There's an opportunity here. And, I'd been learning about blockchain and that was sort of the fad at the time. And crypto was starting to get hot and he's telling me about ICOs and tokens. And so I said, okay, I'll dip my toe in this. I had a friend who basically was acting as my Sherpa, helping me guide me into the space, because it's intimidating. If you don't know how to buy Bitcoin or how to store it, you can be turned off from it. And so I had someone helping me out in 2017, basically. And that gave me the confidence I needed to start doing things on my own. Again, I was able to store coins with my own private key very early on, for myself anyway. And then sort of 2017 was a wild year. I made some money, I lost a bunch of money. But at the end of the day, what happened was I was learning about crypto, blockchain, all the noise. And slowly at the back end, my understanding of gold and sound money and Austrian economics was coming back, and it was, I'm trying to fit the puzzle pieces together. How do these sort of work together? And eventually I was able to make sense of it and realize that Bitcoin is the only thing here that matters. It is the best opportunity in terms of risk and reward. It is sound money, which is like the holy grail, the thing that I wanted with gold from the get-go, but it actually works, whereas gold has its faults. And so, basically by 2018, totally divested myself in, taking 95% of my coins were losses of all the crypto crap I had, just consolidating the Bitcoin. And I realized that basically, okay, Bitcoin is going to change the world. It is the only thing that matters here. It is profound. It is elegant. It is a beautiful solution to a long-standing problem, and it's not going anywhere. So people are going to need it. And I never set out to write a book when I put those puzzle pieces together. Sorry, I realize I've been talking a long time. I never set out to write a book when I jumped into the Bitcoin world. I actually started putting together a PowerPoint presentation thinking, oh, well, I used to work in wealth management, so I'll try to explain to investors why you should buy Bitcoin. Before I knew it, I had like 80 slides. And a friend of mine's like, you can't present this to someone. It's going to take you 5 hours. No one's going to listen. This is crazy, but it's a good skeleton for a book. Like you could put some meat on these bones and you might have a book here. Sure enough, I slept on it, woke up the next day and I was like, that's a great idea. And so ended up writing a book. You were telling me you recently read it. It still followed some of the initial design elements I had from the presentation. If you like every page of the book, I'll just quickly show it off here. So here's the cover of the book, but every page is individually titled. It has a quote as well. It's, numbered. So it's very well indexed. There's actually full page. I'm sure I'll find it in a second. Oh, I flipped one. There's full page images contained in the book. So there's lots of visual cues to sort of help readers, charts and things as well. But I kept the theme and the spirit I had from the presentation and I sort of adapted it into the book. And the idea being that I'm going to help you incrementally build your knowledge. If you get to, chapter 7 and I reference something and you're like, oh, how does that part work again? Okay, you go back to chapter 4. And because it's numbered and titled, it's very easy to go back to find the exact idea. Okay, refresh that concept. Now I can pick up where I left off and keep going. And you're basically building up your knowledge base on Bitcoin. And, I'm not a 10 out of 10 expert on Bitcoin. I don't know everything there is to know about Bitcoin. Like I said before, I'm an idiot banker who just happened to connect a few dots and, form a clear enough view of what Bitcoin is to me. And so I thought this book could be an introduction, in a sense, to Bitcoin, a beginner and intermediate book where I take you into the shallow end of the pool. If the water feels nice, if it's warm, you like the feeling, okay, you can go explore and dive in the deep end on your own. So that's the book and that's my background.
Yeah, cool. The book's excellent. I think that it's definitely more than than just a sort of beginner intro. I thought you did a really, really good job diving into the important technical aspects of it in a way that is, there are more technical books, but it is definitely technical in a good way. And I was listening to you thinking about your crypto journey, relating it back to the 3 important concepts about Bitcoin that make it different. And you sort of nailed them together for me in the same way. It's like when people are trying to understand this, what is crypto? And you said Bitcoin has fixed issuance and a scheduled supply, and it takes energy to produce. And each of those 3 things really is unique to Bitcoin. And those 3 things being in one thing is absolutely unique to Bitcoin. For anyone who is just trying to take the go right to the finish line on why Bitcoin only, you just need to really listen to the first 3 minutes of this conversation. Yeah, that's cool. So then the book came out in September of 2020. And at that time we were about, 5 months into going 80% of the way to the Handmaid's Tale in Canada. What was it like for you to you would have maybe been in the end stages of writing this book and then now witnessing sort of round 2 of the great financial crisis, financial response? Because in Canada in March of 20, they really fired up the printing press. And by September of 2020, when the book came out, it was, we were paying people to do, the government was paying people to do nothing and keep their businesses closed. And
yeah, I remember vividly in March 2020 when the initial sort of shutdown happened, that 2 weeks to flatten the curve that lasted, 2.5 years. I vividly remember, right? Bitcoin crashed from 6,500. It had sort of been languishing and it dropped down to 3,000. And I was probably writing the second last or third, chapter of the book at the time. And I was sitting in a coffee shop thinking, I feel nothing. Like, I don't care that the price is down, because writing the book was also an exercise in doing my own research and deepening my understanding of Bitcoin as well, and making sure that my initial thoughts that I had before writing the book or the presentation that became the book were real, that I wasn't fooling myself somehow or deluding myself. So I'm in the finishing stages of writing the book. The price drops. And I'm like, I feel nothing. I should probably find a way to scrape together some more cash and buy some more Bitcoin because this seems like an opportunity. We're going places. There's really no other alternative but to go places. So yeah, I ended up publishing the book, like you said, in the fall of 2020. Bitcoin had already recovered. Well, it had dropped to, like I said, about 3,000. It was back up to 10, 11, 12 by the time I published the book. And I was, to be honest, pretty distracted with nailing the book. I'm working on the imagery. I'm working on the actual writing. I'm working with my editor. I'm working with the typesetter who puts the actual text into and fits it appropriately and designs the pages for me or with me. So the whole shutdown, COVID stuff, I wasn't even paying that much attention to it in 2020, other than I had this itch in the back of my head going, okay, I don't know what's going on. 2 weeks to flatten the curve. Sure, I'll give you 2 weeks. But if you go past that, my antennas are going up and, something's off. And obviously my suspicion was that they would go past. And, we don't need to revisit the whole history of what went down during that period of time, but I don't think it was exactly as advertised. And and sure enough, Saylor shows up. I think it was in fall or August of 2020. So just before my book comes out with that announcement, because I actually remember people were wondering, oh, where's the next wave of buyers going to come from? Retail had come in 2017, got screwed with the ICO bubble. A couple of years later, the air had kind of been let out. And it's like, okay, well, they're tired. They're uninterested. They're not going to come back. People were sort of, speculating, where's the next wave of buyers and interest going to come from? And then Saylor comes out of the woodwork with, oh yeah, corporate treasuries, just tons of cash sitting in corporate treasuries. Okay. And suddenly, it's not that he started that leg of the bull run, but I mean, he played a role most likely in getting attention going again. So the book comes out and it's like, if you plot the point where my book comes out on the price, it's like I nailed almost the bottom and we just, shoot up from 10, 11 to 60 or 65, whatever it was in the span of a few months. I'm just like, well, I'm a genius, what great timing. What, for marketing purposes, this is fantastic. So yeah, that was fun. But the unfortunate part was, as an author, it's like, well, I would love to go shake hands and talk to people and tell them about the book and how I poured my heart and soul into this thing and that I think it can really help them understand. And there's all the benefits of Bitcoin, but I sort of had to do a book tour for my living room because of all the COVID lockdowns and measures. So that was unfortunate, but you know what? Find the silver lining in it. There's something in there. It was probably for the best some way, somehow.
Yeah. And this is a side segment, but I've been dying to ask you, if you listen to the audio, at what point did you decide to do all the different voices for, if you're quoting people in the audiobook, you often impersonate them?
Yeah. So, well, actually, I had Guy Swan read my book. That's Guy Swan. Yeah. So he read my audiobook. And as I mentioned, and as you just alluded to, so there's a quote on every single page. So I quote presidents and philosophers and economists, but I also quote Batman, Superman, Spider-Man, Charlie and the Chocolate Factory, The Hunger Games. Like it runs the gamut. And so, I gave Guy, the creative license to just have a little fun with it. We tried to include a little bit of even sound effects, like not overbearing sound effects, just when there's certain cues in the words, Bitcoin's an engine that can't be stopped. You hear maybe the revving of an engine kind of thing. It's, so we had a little fun with it, tried to make it stand out just a little bit from other audiobooks.
Yeah, it's a great way, I think, to illustrate the relatability of the book because you do, as I mentioned earlier, the book does get technical. You unsound money stuff, but there are definitely fun aspects of it to help people stay engaged in the journey, which is, I think, something that I could say is sort of unique about the approach of your book that makes it memorable.
Yeah, one thing I really spent a lot of time on was I didn't want to waste any words. So I tried to be very concise and to the point and accurate. But at the same time, how do I do that while using very friendly and relatable language? Because I'm not trying to push people away. It's trying to bring people in and make them feel like, yes, I'm describing these technical elements, but I want to do so in a way that, okay, it makes you feel like you can somehow relate to it. So that, as much as I spent a good amount of time actually putting the content together and researching, I spent maybe more time refining my content than I did writing it, because that was really important to me, was to get the message across and get it across in such a way that, like you said, I can be technical, I can go in depth on certain issues, but I can still be succinct and relatable. And so that was sort of my challenge with the book, and I'm glad it hit. because that was the goal. So thank you for that.
You learn a lot about your own subject, writing a book and refining it. And like I said, going through the exercise of not wasting any words. What were some things that surprised you that you learned from yourself?
That I learned for myself. I remembered writing. So I have chapter 3 is called money and chapter 4 is called growth. And growth is, I didn't want to call it economics. It's basically about economics, but I thought growth was maybe a less intimidating term. I remember thinking to myself, well, those are going to be easy for me to write because I worked in banking. I worked in wealth management. I studied economics. These are going to be a breeze. I think those were my 2 chapters to write, was to realize that as much as I had this knowledge in my head, converting it into something outward, external, that I can give to other people and share with other people was way more of a challenge than I realized. So, but just writing in general, the exercise of taking your thoughts and formulating them and being able to pass them on to others, it's difficult. It's very, very difficult. And yeah, so I learned a lot, you could say, about that process. And I continue to write today, not about Bitcoin as much, even though there's lots to write about with Bitcoin. But yeah, the whole process of writing is an education unto itself.
So flash forward, you're finishing the book as the third halving is just bearing down, and we are recording this about a week away from the fourth one. Yeah. What is your sort of and I'll say maybe alongside that, yesterday, the Canadian government announced that they're going to be making 30-year mortgages available in Canada. We've got, $8 for a head of lettuce in Canada. And maybe just a penny for your thoughts on what's happened in the time since you've written the book and where you're at today.
Yeah, I remember even during the financial crisis, you heard the term, we're kicking the can down the road, right? By printing money, by bailing out banks, we're failing to deal with our problems head on today. We're sort of papering over them, putting them under the rug, and we're going to deal with them tomorrow, but they're going to be worse tomorrow because we didn't deal with them today. We're prolonging our problems. We're extending the lifespan of the problems. Yeah, we're making it more difficult. So, it's sort of the same story today, but it's like a heroin addict. It's like every time you take a hit, it feels good for a minute, and then, okay, it wears off and you have your hangover. But the more you do it, the bigger the hit you need to get the same high. And then the hangover gets worse and worse before eventually you probably OD. And so if you think of the financial crisis as a starting point, it's not necessarily the starting point of the whole financial mess, but that was sort of a big wake-up call for a lot of people in our generation. You have that initial big hit, you have the hangover, or you're papered over, you have this high from 2008 to, it almost went to 2019, 2020. There were probably hiccups along the way. You got a couple little boosts along the way, but then it doesn't do it anymore. It doesn't cut it. So, okay, you got to go stronger and take even more. Now we're feeling those effects, seeing prices, $8 lettuce. And that's, one of a million examples of things that are just soaring through the roof. And we're seeing people try to blame it on everything under the sun. Not people, we're seeing officials blame it on everything under the sun, except their own actions, fiscal policy, monetary policy. Those are clearly the drivers of inflation and always have been. And so the story of what's happening and why it's happening is getting crazier and crazier. And it's just like a sign of civilizational rot and deterioration. And there's no alternative but for things to get worse until we deal with the problems head on. And dealing with the problems head on means admitting that the system is fatally flawed, doesn't work. We need something new and better if we are going to move forward on a more sustainable and, frankly, prosperous path, because we're doing the opposite of that right now. And there's nothing that we've done in the past that will get us there. Maybe our governments are going to try to back their dollars with gold, but that'll be a stopgap at best. And frankly, it's also an admission of the failure of the existing system, that they abandon it and then they're going to come back to it. I don't think that's what's going to happen, but you never know. So we're just going to keep kicking the can because no one wants to admit defeat. No one wants to default, say we're bankrupt, say the system doesn't work. So what do? Well, prices are going to get crazier. Social dilemmas are going to get crazier. Division is going to get worse. And the best we can do as individuals is seek refuge for ourselves, find solutions to problems for ourselves, Bitcoin happens to be the best solution that's out there. And the reasons are detailed in my book, as well as the writing and videos of the many amazing content creators in this space.
Yeah, it's funny. I get guests from other parts of the world asking about Canada, and I don't want to beat it to death. Canada's still a great place, but the symptoms of I don't know what the right word is, pre-dystopian hysteria, like there is a lot of odd things bubbling up just here and there that are real, and things are different up here, and they are changing all the time, and that change is accelerating, and it's fundamentally tied to the way our money works here, which is working less and less good compared to other places all the time.
Yeah, well, you have the government trying to get their hand in every pie, thinking they can fix everything. It's just pure ego driving that, right? There's no humility in what our officials are doing. But just thinking of Canada in general on sort of a greater timeline, I remember, earlier in my career thinking that, when the financial crisis hit, thinking, okay, social decay is going to happen and financial decay is going to be the cause of it. And I remember literally for like the 10 years after the financial crisis, or 15 years, whatever it was, thinking, at least in Canada, because we have so many like multiple cultures and people from different backgrounds, and everyone's pretty polite and no one wants to step on each other's toes, that even if things ever really declined and got bad, that somehow, because people were like afraid to piss off other people, and that was seen as sort of a faux pas, a thing not to do, and we were respectful and polite, that we would somehow navigate it better, what was my thought. And then, of course, COVID came along, and it's almost like that was weaponized against us, and it was more effective because everyone, I don't want to step on anyone's toes, but now I'm told that, if I don't wear a mask or don't get my thing.
That guy was hugging his grandma without a shower curtain. I saw him.
Yeah, I saw them. They were standing 2 feet apart. They were practically kissing, like they were practically hugging. Like everyone became this tattletale or, this fanatic, and not everyone, but you know what I mean. It became this hysteria because everyone wanted to fall in line with the politically correct thing and not be seen as a dissenter, because that was the opposite of what we weren't dissenters. We were polite and everything was sort of working well enough. There was always problems under the surface, but it wasn't so apparent and it wasn't so harsh. But yeah, the thing that I thought would save us or be our saving grace ended up working against us at the end of the day. So I've always personally sort of found that very interesting, and it's caused me to, reevaluate certain beliefs and principles that I had, and try to figure out, then what's the best path going forward? And not to say I've codified my thoughts on that, but they're evolving, and they are certainly changing from what they were.
Yeah, a really good friend of mine, this is a short personal story related to that time, lives in Calgary, and he's we'll call it a successful traditional financial services executive. And at the height of that time, I don't want to say exactly when, I can't remember, there were rules around we weren't allowed to be in other people's houses. And there was a secret meeting of a handful of friends happening in somebody's basement. And they were so worried about neighbors calling the police if neighbors saw other people going in this person's house, that they propped their back door open. This is Calgary in the middle of the winter, so it was minus 100. And this guy basically was giving me instructions to park his car as far away as possible, break into a full sprint, and, sort of dive roll through the door. And then, it's like, this really happened. And yeah, it's just so bizarre.
I have a story like that too. We don't have to go into it, but I had an interesting scenario where someone wanted to talk to me about my dissidence of all of that, and she was on the other side of things, and this is someone I've known my whole life basically, and she's like, would you come over and can we talk about it? Sure, no problem. Doors wide open. Again, it was December, I think, or early January. It was actually like just before the convoy, but doors to the house open. It's freezing. She asked me to wear a mask to go in the house. I don't really want to. Okay, you know what? I've known you forever. I'm just going to suck it up and do this so that we can have this conversation. I go in the house, doors, windows open. Would you like some tea or coffee? Anyway, yep, that's,
Yeah, mass formation. I remember thinking about, so it was around that time, 2020, to go back again, where your book's launched, and we're all sitting at home because no one's allowed to leave the house. And that was when this "you'll own nothing and be happy" sort of like crept into the public mainstream zeitgeist. And that ad itself, I think, was from 2016, but it was like in the pre-2020 world, nobody was paying attention to this shit. And like it was irrelevant. And when I did finally see that and people were circulating it, I remember just thinking like, that doesn't make any sense. Like, because my thought paradigm around asset management, financial planning, particularly in Canada, we're so tied to that your principal residence is your financial battery and your retirement plan. So in my mind, my urge was to dismiss the concept. It's like, that'll never happen in Canada. Home ownership is basically the bedrock of how we plan around everything. So good luck, guys. And then it dawned on me, if they absolutely obliterate the currency, and the first thing that will happen is this kind of like asset melt up, and then we'll see what's next. And here we are, 30-year mortgages.
Yeah, right. 30-year mortgages just announced the other day. I also, clearly we were on the same wavelength because I remember thinking, well, something has to give. And well, if interest rates are going to rise and real estate's going to fall, in my head, I thought to myself, they can't allow that because it is the bedrock. It is the bedrock asset underpinning all of the mortgages and bonds issued by the banks. It is, like you said, everyone's nest egg in Canada, right? Everyone's net worth is tied basically to their house. And so if it falls, people will be in the streets with pitchforks, right? Like if they let real estate come down, people will be in the street with pitchforks because we have nothing else. I mean, we have lots we could offer, but we just don't because we have terrible policy. And so now here we are, like you said, where they're doing everything they can to prop it up. Okay, interest rates are rising, so real estate prices should fall. And so they counter that by stifling the creation of new builds, the supply, right? Okay, well, that'll create this supply-demand equilibrium where prices can stay high enough that people won't be in the streets with pitchforks. Get these guys out of here.
It's basically what happens with monetary policy and cryptos. I think about Canadian real estate and I think about the FTX token had this moment where Carolyn Ellison was like, we'll buy all your FTT tokens for $22. And then like a day later, they were worth nothing. And it's this shared delusion of when people talk about home equity, like everybody here thinks they're rich because of this, and people borrow against the equity in their mortgage. And like, that's all just made up air. Like, and if you try to talk, you use your words but it happens a lot. It's this common refrain of, they'll never let this happen. So there's also this weird, I don't know, zealousy. What am I trying to find?
Zealotry. Like there's a
zealotry. That's the word. If you start to just push on the soft skin of real estate does this make sense? You get this crazy reaction. Like, no, this has to go on forever. Prices have to go up forever, even though if they do that, like if the real estate prices do what they did over the next 25 years, over what they did the last 25 years, it'd be like $50 million for a house. Like who knows who, yeah.
Yeah, we had basically 2 full generations worth of real estate just consistently rising, more or less, right? So it was really ingrained in a lot of people that, well, when all else fails, just dump your money in real estate and that's a good place to be. And sure, you got to borrow to the hilt to do it. But, the last 15 years told us, well, don't worry, because interest rates are going to stay low. And then Tiff Macklin goes on TV and says, don't worry, we're going to keep interest rates low for a long time. So borrow up. And then, obviously we get rugged, the next year because that's what central banking is. That's what they're going to do. They're going to rug you. You got to figure out how and why. But yeah, people really, truly, and I mean, I live in Toronto. It's the financial capital of Canada. Real estate here is absolutely insane. I know way too many real estate agents. Like, there should not be as many people in my age group that are real estate agents. They should also not be getting paid as much as they're getting paid for, hey, sign this contract to buy a house. I helped negotiate the price for you. It's like, but I'm paying the list price. Like, I'm paying $100,000 over asking. Like, what do you mean? Like, what did you really do that you're going to get, you're going to get 2.5% on the value of this purchase? Are you kidding me? You're not worth, this should be an algorithm. The contract should be, I should just have lawyer AI just review it to make sure I'm not getting screwed. And I shouldn't even need you, let alone give you 2.5% of the purchase value of this thing that's worth $1 million or $2 million or whatever it is.
Hey, everybody. I'm thrilled to announce that Block Rewards has come on board as a sponsor for the 2024 Canadian Bitcoin Conference happening in Montreal, May 16th to the 18th. It's going to be a great event with an unreal lineup of speakers, and we couldn't be more excited about being involved. If you're thinking about going and you don't have your tickets yet, you get 10% off of your pass using the code BLOCK2024, and that's all capital letters. And you can get those tickets at CanadianBitcoinConf.com. Hope to see you there. To rag on Toronto, like I'm a Western Canadian, and it's like Toronto is the event horizon of the fiat singularity that's happening in Canada.
Listen, man, there's a reason Toronto called itself the center of the universe for so many years. Right? We are the event horizon here.
But it is also the epitome of this financialization of things, like the sort of Toronto mindset around what these things are worth and how it all should work. And, I think Canada is a fascinating example for people who are listening to other parts of the world, because our real estate prices have appreciated so dramatically compared to the US real estate prices. So if you look at houses that are just across the border from Toronto and Buffalo, wherever, they're like a third or a half. And I think that it speaks to incentive mechanisms and the ingenuity that results out of currency breaking. So the US dollar has broken a lot less than the Canadian dollar. And one thing that's an obvious result is people haven't gone out of their way to financialize other things to the degree that we have here. We just don't think of it as that way, because the inverted way of viewing what's happening is, everyone's getting rich. We're all real estate geniuses. And, there's something magical and unique about real estate in Canada, that most desirable asset in the world.
Yeah, it's very special here. Let me tell you. Did you see the report maybe 2 days ago? Toronto is now considered more expensive than New York and Miami. And Miami had a huge influx of people the last few years. But, right, it was already a major desirable city, but bigger, more expensive than New York or Miami. Like, are you kidding me? If that alone doesn't get you scratching your head going, maybe there is a little bit of hot air in here that we need to let out, or, if that doesn't get you scratching your head, then I don't know what will.
Yeah, and back to this, you'll own nothing and be happy thing. I guess it's just such a tricky thing, because they really have roped everybody into it, and like people are still piling in. It's like the higher houses rise, the more urgency people feel to get in before it becomes even more unattainable. And once somebody's in, it's funny that people think Bitcoin sounds like culty, because real estate is way more of a cult than Bitcoin. Like, it has to be, because it's so nonsensical. The only way you can participate is if you've convinced yourself that this thing's out.
And you could even argue that real estate isn't even an asset. It's a liability, right? You have ongoing costs in terms of maintenance. You don't even really own the land. If you stop paying your property tax, they're going to come and take it away from you. And those taxes are only going to go up, because that's what we do in Canada. That's how we fix things, by raising more taxes, right? The city of Toronto proposed, maybe we should tax the rain, and based on how big your house is, you'll have a higher tax because you're deflecting more rain to the sewage system. Like,
that one was a real head scratcher. That's a real thing. That's the proposed rain tax for the city of Toronto.
Yeah, I highly doubt that's going to go anywhere. I'd be surprised, but like, crazier things have happened already here, especially the last few years. So you never know.
I mean, they're talking about municipal income tax.
I don't even know where to start. I didn't hear that one, but it doesn't even surprise me. Like, sure, just squeeze every last drop of blood out of the stone, right? Like, do everything. That's what they're doing. This is the problem with like central planning in a nutshell, is that it views the economy as a fixed pie. Okay, and currently we're taking 49% of that pie, but it's not enough to fund all the things we want to fund. And we think only we can fix things. So we're going to tax you a little bit more, because that'll give us that much more money so we can go fix all the things we need to fix, because only money can fix things. And the only place we can get money is taking it from the citizens. And they never look at the fact that, historically speaking, the more and more you tax, the pie tends to shrink. People with money, productive businesses, productive assets, whatever, will say, it's not worth it for me to be here. So they're going to up and leave. I think there was a big study or a stat that came out of Norway. I saw it a year or two ago, where they thought, we're going to do a wealth tax. And the goal was to raise another, call it 100 billion in revenue. And what happened was they did this wealth tax, and they ended up raising 300 billion less in revenue, because the wealthy said, no, I'm wealthy and mobile. I'm going to go somewhere where I'm going to be treated better. See you later. And so the wealth tax had the opposite effect. They took in less revenue. And again, looking at it as the pie, it's never, let's grow the pie. And even if we have a smaller percent, the growth will make up for Well, if we had 49% before, if we take it down to 40%, 40% of a much larger number is better than 49% of this much smaller number, but they can never conceive of it that way.
And back to your, they've kind of done a good job weaponizing our limited understanding of how this stuff works alongside our cultural niceness to here. It's like, oh, people need to pay their fair share, regardless of what we think that number, the total amount collected should be. We're going to decide what that number is. You guys worry about paying your fair share of that number. It's like, okay.
It's a stick instead of a carrot, right? It's, well, we're going to punish you for being productive and successful rather than, well, we want the productive and successful people here because they create the opportunities that remove the need to, well, we need to take more so we can give to others. You don't have to give to others by taking from people. If you let them flourish, they'll create opportunities so that these people in need will be less in need. They will have more opportunities to be successful in their own.
We should genuinely be like the Dubai of the West. Canada, everybody who lives in Canada should be rich just because they were born in Canada. And, what's happening right now is actually the opposite.
We are a beautiful nation that has mountains and lakes and islands and resources, right? The oil, gold, all kinds of other, minerals, fresh water, uranium, potash, right? We have so much to offer the world, and yet we keep cutting off our nose to spite our face. I also think about this all the time. Do you ever notice how there's not a single government anywhere that learns from failed policies or even reviews old policies, right? We're always adding, okay, well, we're only going to tackle the next problem by adding a new set of laws or taking more from this one group to redistribute it to another group. It's never, hey, we did this thing 10 years ago and this was how we advertise it. It was going to result in outcome A, but instead it resulted in outcome X where it was a failure. We should scrap that thing that we did. There's never any reflection, accountability, taking a step back, zooming out, or even learning from other jurisdictions, whether it's cities learning from other cities, provinces, other provinces, countries from other countries. There's never any of that. It's always just more power to the government, more tax to the government, take. And so that's why combining that mentality, which is likely an incentive and result of our monetary system, combining it with the monetary system, there's only one logical outcome is we kick the can as far as we can until you literally kick it with all your might and it goes nowhere. And that's the end of the road. And then we start again. And the good thing for us is if you think of society as this, tree falling in the wilderness and it's in the process of tipping over, and I don't know what stage we're at over here, but it's in the process of going over. In the past, there was nothing to catch it as it falls. Monetary system collapses because they debase the currency and boom, hit the ground. Everyone starts from scratch. We have to go back to barter, start digging for gold or silver again, or figure out which salt or seashell is going to be valuable this time. 100 to 0. Today, because of Bitcoin, we're falling, but this cushion is coming up the backside to catch us. So even as we're going to fall, if the money and the financial system and real estate falls apart, there's this highly defensible asset, property, money, all of the above, that's coming up, that's getting more and more valuable, that literally anyone can use by downloading an app. Take it 2 minutes. We could do it right now on air if we really wanted to. Anyone can download a Bitcoin wallet, be connected to the network, start sending and receiving money, which is all you really need to do. It doesn't have to be any fancier than that. Bitcoin doesn't have to be this incredibly complex, speculative technology, communications network channel, data storage for the crazy ones, doing that stuff. Yeah, it's better that all it has to do is send and receive value. And it works. It does it. It's better in practice than it is in theory. I'll give you an example. I did a seminar with a group a few weeks back, spent sort of 2 hours, chat. Okay, Bitcoin does this, that, the other. It's so great. If you want it, consider getting it. I'll help you. I'll help you set up a wallet. I'll help you do all these things. And at the end of the presentation, one woman came to me and she said, thank you. I really appreciate this. I learned a lot, but I'm not necessarily going to invest in it today. And okay, sure. No problem. But I would love to have some, but I can't really invest in it. And I said, well, her profession is she's a registered massage therapist. I said, you could accept Bitcoin. You offer a valuable service that people pay you for. It's just money. You could just accept it. And suddenly she's like, oh my God, I never thought of that. I didn't even realize that was a possibility. And it was like a light bulb went off overhead. It's just money. That's all it is. And so if we can get people to just do that bare minimum as things are falling, if the cushion comes up just do that bare minimum, the impact will be significantly lessened and we'll start the recovery a lot faster. And so I think that's what sort of inevitably happens. It's not going to be a perfectly clean process per se, but I think the incentives of Bitcoin come up behind the prosperous, beneficial incentives of Bitcoin come up to catch the failing incentives of fiat, and then we can continue forward on a better path.
And again, sort of Canadian content episode, I think that like Canada is another fascinating, I don't want to use the word battleground, but it's the one that came to mind for these ideas to play out in reality, because I have a really difficult time imagining how our system can coexist with a maturing Bitcoin system that is fairer and smarter and better, while the value of our money up here is disintegrating. So there's something called acceleration theory, which I know that you are a fan of, and I am as well. And we haven't actually talked about it ever on the show. So maybe we can just spend a little bit of time talking about acceleration theory.
Yeah, so this is an interesting one for sure. There's some people, if you look at, I think it's like Mark Andreessen's profile on Twitter. He's, what's his fund? I forget one of the huge US VCs. He has E/ACC, like ethical acceleration or something like that. That's not what we're talking about. Just to be clear, like you'll see a little bit of that around. I think even Sam Bankman-Fried of FTX was sort of an altruistic or whatever, acceler, whatever it was called. I don't know. That's not what we're talking about. What acceleration theory is to me is you have a child and you have a hot stove going because you're cooking dinner. And you say, kid, don't touch that stove. You're going to burn yourself. Don't touch that stove. It's hot. You're going to burn yourself. You shouldn't do that. Don't do that. But the kid and their naivete and their, just, well, no, I'm going to touch it. You're like, no, I've been here. I've been down this road. I have, trust me. Trust me is maybe not the right word, but think this through. It's very, very hot. Don't touch that stove. If you were a reasonable, rational child, which obviously is not the case for most people, you go, you know what? Dad's right. I'm going to burn myself if I touch that stove. I shouldn't do it. Acceleration theory is, well, you know what? I tell my kid all the time, don't touch that stove, don't touch that stove. But they're just so headstrong and think they know what's best. The only way they will really, truly learn their lesson is they touch that stove. My hand, it's hot. They're never going to touch that stove again after that. So when we think of, let's go back to the financial crisis and the moment that got you and me to really question what is money. Would I have ever become first a gold bug and then ultimately a Bitcoiner, had it not been for the financial crisis? Sorry, I don't know if you can see those balloons going. Would I have ever become a sound money advocate, been changed my perspective on economics to learn about Austrian economics, had it not been for the 600 billion that came out of nowhere? No. So I was accelerated. People may have said, oh, printing money is bad. And I just go, oh, yeah, okay. I don't know. I guess, the money system seems to work, whatever. But then they come along and they do this thing. And it's like, damn, I just got burned. And now I'm activated and I'm thinking and I'm questioning. So in a nutshell, to me, that's acceleration. So it comes in different points at different stages and it hits different people based on their perhaps different interests or the moment that the moment that it most affects them in real life. COVID was an acceleration moment for a lot of people in terms of what governments may or may not be willing to do to protect people while upholding their rights. You didn't defend my rights and you certainly didn't protect me. You can say you did, but now I've been accelerated because I know that, well, you'll say one thing, but your words don't match your actions and that matters. And so now I'm going to be more defiant as a result of that because I have less trust and I know definitively I can't trust you anymore. So yeah, that's sort of my quick take on acceleration. What's your sort of spin on it, or where do you come to this from?
I think of it as so to maybe tack on to your notion of moments that cause a speeding up of people's understanding of the relevance and urgency of these ideas. And as it relates to Bitcoin, to me, it's on the one hand, it would be cool if Bitcoin can peacefully coexist, mature. We can onboard people slowly as they are ready to understand it. But the reality of how the world works is kind of that the problem is urgent now. It might be better if more people understood the urgency of the problem sooner. And because the solution does exist, the issue is, I think personally, a transition to Bitcoin is going to be it's a step function change in money, and it will require a fundamental rewiring of the way everything else works. And that's unavoidable. So you might as well just rip the Band-Aid off and do it. The sooner we get through the weird part, the faster the rebuilding of a more optimistic world on the other side awaits. Is kind of my...
Yeah. But we live in a world where, the powers that be, the authorities, officials of our governments and central banks, et cetera, they can never come peacefully to that for the specific reason that it's massive blow to their egos and they can't stand that, but it siphons their power away. And that's the basis of their existence. And so they will fight it, perhaps violently. And we could argue perhaps they have to a degree already fought it violently.
Yeah, it depends on your definition of violence.
Yeah, exactly. And you and I can go around and talk to people and say, hey, some wonky stuff going on in the world of money. Bitcoin is this great solution, and maybe you should have a little. And I don't know what your experience is. I would imagine it's somewhat similar, but I can have a conversation with, let's call it 50 people, maybe at the high end, 5 of them it will really resonate with, and 3 of them will actually take action. And so it's a very gradual thing when you're approaching it from that positive, hey, this thing is beneficial to you, and here's the reasons why. It doesn't hit with people. They need that negative punch in the face, right? Everyone has a plan until they get punched in the face, the Mike Tyson quote, right? They almost need to get punched in the face. And that's the violence that we're talking about. It doesn't have to be physical violence. It can be a number of different ways of coercion and influencing people to do things that maybe they want to do otherwise. But that's, the acceleration is you get punched in the face.
Yeah, and maybe just to close the loop on this real estate thing, it's the other aspect of the current system is that it does a great job forcing the majority of the participants to want the status quo to continue as long as possible. So if you're somebody that bought a 30-year mortgage this week, you're going to want that 30 years to unfold as uneventfully as possible. And hopefully that when that time's up, you'll be able to, pass it down to the new members of the cult. And
it's, the whole transition from the fiat standard to the Bitcoin standard, it's going to be tricky. There's no perfect roadmap that's been written for this. What we're doing, what Bitcoin is, has never been done before. So we're all figuring it out as we go. You have the people who more or less get it, you and I and many listeners, each doing our part. We're having our conversations, and we're slowly getting people to tack on and join the party and understand that, hey, we're here for the brighter future. We're building the bridge to the brighter future. In fact, the bridge is already built. You just have to walk across it. But then it's, okay, well, how does everyone else follow? Or at least how do the benefits start to flow? Even if it's not that they all join us, the benefits start to flow back such that they don't view the bridge as this dangerous, complex, tricky thing that they should avoid and they can't possibly understand. But they look at it as, oh, that's, I want to go travel to that beautiful place on the other side and maybe see what it's all about. And, I can come back. But yeah, in terms of, we're anchoring to real estate a little bit in this conversation, how the real estate part plays out, we're seeing it already with this, again, extend and pretend, keep the values up, stifle new builds. Where does that lead us? Well, we're going to keep inflating, and it's all fake. It's not real. You're not really getting richer, because if the value of your house goes up, well, if you want to buy another house, well, it also went up. So your relative wealth hasn't actually changed. And also all the things you want to buy in life, food, energy, all that's going up. So your people need to really take to heart the difference between nominal wealth and real wealth. Nominal meaning, right? I can move to Zimbabwe and be a trillionaire. I won't be able to buy a loaf of bread, but I'll be a trillionaire. It's meaningless, right? Numbers on the screen, centralized credit tokens are meaningless because there is an infinite supply. And so that's why we Bitcoin, because, well, it's a much more objective, real way to measure wealth that cannot be inflated away. And so when you and I now look at real estate and I think, well, okay, I want to buy a house. Well, 8 years ago or 7 years ago, it might cost me 200 Bitcoin. I'm just pulling numbers out of my head here. 200 Bitcoin to buy a house. And then a few years later, it cost me 80 Bitcoin to buy a house. And now I'm looking at 12 Bitcoin to buy a house. My cost is going down because I'm not using a phony measuring stick anymore. I'm using a very objective measuring stick that you and I and all the other Bitcoiners, we all check the scoreboard, and it's always the same. It's always my wealth is X, whatever my number is of Bitcoin that I own, divided by 21 million. My share of wealth never changes. The real purchasing power is growing, and I can see that because it costs me less Bitcoin if I want to buy these goods and services. Whereas it's the other side. Okay, if I have $100,000, what's the denominator, right? Is there $1 trillion Canadian dollars in existence? Is there 2? Is there 5 trillion? I have no idea. And even if I knew precisely today how many Canadian dollars are in circulation, I have no idea what there's going to be tomorrow. I have no certainty about what the monetary policy is going to be tomorrow, what the central bank is going to do tomorrow, how much debt the government's going to put me in, and the central bank will finance it by creating some new money for them. So I can't use this to think about economic reality. And so looking at real estate through that lens is just a fool's errand. And so we need Bitcoin. And it'll be our saving grace at the end of the day.
That might be a great place to wrap it, Jesse. This has been a ton of fun. For people who are listening and want to find more of you online, obviously we'll include the links to buy the book in the show notes, but where else can people find you?
Yeah, Twitter at Jayberjay, Jayberjay. They can pick up the book at magicbitcoinbook.com. You can obviously buy the paperback. You can listen to the audiobook narrated by Guy Swan. You can ask yourself the question, what is money? And you can also buy individual pages of my book for sats using on my website. So if you want to get a taste of my book, you can basically stream me sats as you start to read it. And if you like it, you can either just keep going until you read the whole thing, or you go to Amazon if you want the paperback. I think I mentioned this briefly either on the show or just before we got into it, but like I put my heart and soul into this book. It's not just written word. It's a work of art. I spent a lot of time finely crafting not just the words, but the images, right? So the imagery we have here, it's all very intentional. There's a few details on there that I think are very cool and I'm very proud of. So yeah, that's my story. Please enjoy the book. It's been a lot of fun chatting with you, Scott.
Very cool. And if you're listening and you made it to the end of the show, I want to thank you as well for your time and attention. It's a currency as well. I hope to see you again next week. Thanks for listening to this episode of The Block Reward. We're trying to do something different here, creating accessible conversations meant for people who aren't obsessed with Bitcoin. If you found this episode informative and engaging, hit that subscribe button to make sure you stay updated with future episodes. Your feedback matters. We'd greatly appreciate it if you could take a moment to share your reviews and help us with our goal of creating Bitcoin content that is simple and easy to understand. Bitcoin has an important role to play in the future of finance. It will change the way we save, spend, and invest. Discover why Bitcoin offers a game-changing opportunity for forward-thinking employers by visiting blockrewards.ca. Block Rewards' mission is helping Canadian employers implement strategies for integrating Bitcoin into compensation and benefits, supercharge your recruitment and retention strategies, and help your team members plan for the rising cost of living by rewarding their work with the hardest money ever invented. Special thanks to our top sponsor, Paramount Employee Benefits Consulting, Canada's only Bitcoin forward benefits and pension advisory. For more information, find them at paramountbenefits.ca. Big shout out to Podigy, our production team that makes all this possible, and BMX Escape for producing our music. Bitcoin is an expansive and dense topic many people walk away from early. To Bitcoin enthusiasts looking for that podcast they can share with friends, family, and colleagues, one they'll actually listen to, we hope that is us. The content of these conversations is meant to be provided for information purposes only. Nothing here is investment advice. Bitcoin is a big topic. Be sure to do your own research before making any personal financial decisions. Thanks for listening.